Hey guys, it's Tanner Manson from Future Investing, and today I wanted to talk about what I think is going to happen in the upcoming year regarding this EV bubble that everyone seems to be talking about. There seems to be way too much competition in a space that might not have enough room for all these players. But before we get started, just as a disclaimer, although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. Let's jump right into it. Just in the past year or so, there have been 20 plus EV makers that have SPAC'd their way onto the market to get market caps of over $1 billion in just a few short months. Not all of these companies, but most of these companies have no profits. In fact, they're actually pre-revenue. Not pre-profit, pre-revenue. They haven't sold anything. Apparently, it only takes a prototype to get onto the stock market, and people will just flood in billions of dollars into a market that isn't even that big in my opinion. Don't get me wrong, EVs are the car of the future. I mean, they will take over. But currently, they don't even make up 2% of every vehicle that's on the road. Let me use Tesla for my next example. I think it's the best way to actually look at the space because they obviously have the biggest market cap, the best technology, everything in terms of those numbers. So it'll be the best way to look at this as a comparison. Now, if you see my last video, you know that I'm a massive fan of Tesla, but not at these current prices. $800 billion for a valuation on Tesla is absurd whenever you realize that all the past quarters that they were profitable, the only reason why they did that is because they were selling emission credits to other automakers. Now, I don't want to get too much into Tesla and why I think it's overvalued. If you want to check that out, I have another video. It'll probably pop up here in the suggested, or you can check it out down below. Just so we're all on the same page though, at $800 billion valuation, Tesla is bigger than the top 10 biggest automakers in the entire world, making up for 59 different auto brands that everyone you know has some of these vehicles. Just those top 10 companies alone had made around 80 million cars for 2019. Now everyone says that they're buying Tesla for the future, okay? And that's why it's valued more than those top 10 companies. Well, how many cars is Elon Musk expecting Tesla's very ambitious goal for 2030? We're talking 10 years away, okay? 10 years. Tesla is hoping to produce 20 million cars by 2030. That is a quarter, 1/4, okay, a quarter of what these companies are making today, the top 10. And this is an apples to apples comparison. Actually, it might be favored more on the gas car because they require more maintenance and more servicing to allow for more revenue of these vehicles. And these electric cars actually last longer than their gas competitors, which means way less maintenance and also repurchasing of their vehicles. For example, Honda, they want you to come in, buy a new vehicle every 4 years, and your car breaks down, plus oil changes, all those different maintenance things. You need a new car. With Tesla, these things are lasting 1 million miles. Some frugal people that purchase Tesla aren't going to need to purchase another vehicle for the next 20 years or so. The actual reoccurring revenue from these vehicles is way lower than today's automakers. They're going to be planning on making so much more money because they sell parts all the time and service the vehicles. But I'm getting off track anyways. What people are comparing is Tesla and their electric vehicle versus gas car companies and which one is going to take over in the future. There is no doubt electric cars are going to take over, but it's just a matter of what valuation are you going to put on this revolution or this transfer of technology? Investors these days get so sucked into these storytelling stocks that they just get stuck on this idea that Elon Musk is going to take them to the promised land and this company is worth $2 trillion by 2021. It's insanity. But if you look at it objectively, these companies aren't making money. Not only that, they're going to have to pour so much into R&D and build up their factories that they're going to stay so not profitable for so long. Now, I do think a lot of the gas car companies are going to go under. I mean, they're all not going to be able to throw up this much cash and take all the necessary steps to be able to transfer into an EV world. But there are some of them that are going to stick around. You know, GM is taking huge steps, Nissan is taking huge steps, and Volkswagen is definitely taking massive steps to stay in the EV game. So you're talking about an industry that is going to keep in a large portion of their old makers in this business, also including the other 20 companies that I just showed you, plus Tesla and NIO and all the companies that I actually do think are going to survive. They all can't fit in this space. And whenever you add into the fact that the auto industry is not even going to be that much of a growing business, factor in the idea of work from home and Amazon delivering all your packages and all these different ideas of we don't have to go out that much, and the idea of social interaction might change quite a bit. That could lower the amount of cars that people need whenever you factor in how much people spend on their vehicles. It might just be cheaper to go, hey, I'll take a robo-taxi every once a week. And I get so many people in the comments saying, don't worry about the finances so much. Look at the bigger picture. Well, take a step back and actually look at the industry. This is not that much of a growing one. It might actually be shrinking within the next couple of years. You look at 2020, for example, was not that great for the auto industry. A lot of people bought a lot less vehicles in total. I got a couple more points that I want to cover. I get a little bit heated about Tesla's valuation. It's just insane in my opinion. But anyways, let's use Volkswagen for our next example and compare it against the three biggest EV automakers in the Chinese market. You got NIO, XPeng, and Li Auto. For 2020, NIO sold about 45,000 vehicles. XPeng and Li will sell about around the same combined, 45,000. And yet, the three companies together have lost a combined total of $2 billion in that year. These companies are relying solely on investor capital and government bailouts just to survive. And yet, these three companies are valued 35% higher than Volkswagen's entire company, even though Volkswagen sells more EVs in the Chinese market than all three of these companies combined, and has a higher growth trajectory than all three of these companies combined as well. These three Chinese companies are expected to make 850,000 EVs by 2023, where Volkswagen is expecting to do 1.5 million EVs by 2023. And that's not including their original business that's still bringing them in an annual $15 billion a year. So you're talking about these three companies that get all their money from investor capital and government bailouts, where Volkswagen is going to make more vehicles than all three of those companies combined, and yet they're using their own capital. They already have 2 factories in China, and that's just the start. Now, it's not all sunshine and rainbows for the current automakers. I mean, they have a lot of problems. A lot of their assets are tied up in making these ICE vehicles that just isn't going to translate to these EV markets. So they're going to have a big problem whenever they have to sell that stuff or sort of convert it over to the other set. And they also do have massive debt problems whenever it comes to ex-clients having, massive pension funds that they still have to pay out that isn't going to be on the balance sheet of the new guys. I want to stress this a ton. EVs are the future. I am in no way comparing gas cars to EVs, but you do have to sort of see that some of these guys coming into it originally do have a competitive advantage. But what's going to happen in these next couple of years is going to be the same euphoria that you saw in 2001, where a lot of these companies had no way of making money. There were a lot of prototypes and great ideas, but what ended up happening is that once these quarters started to come in and they were expected to have great quarters and they still ended up losing $300 million, it finally clicked in these investors' heads and they said, holy crap, we need to sell now. And in a matter of weeks, these companies shot all the way to the bottom, bringing down the whole market. And it was a disaster. Wait till the stimulus checks stop. And we don't have all that nice Jerome Powell money printer going. And we have to sort of call it quits on the ability to keep just pouring into these EV companies just to lose our dollars. I'm getting myself so worked up. It's crazy. All I have to say is that market cycles are a real thing, even if we haven't seen one in a very long time. The same way that I know that ice ages are to come because history tells us so. Just because I haven't seen it doesn't mean that it's not happening. But maybe the most similar recent bubble that we've seen of this kind is the marijuana bubble, where people talked about how in this new space, the amount of money that they were going to make was going to be insane. Companies were IPOing like crazy. I remember one point in 2017 or so where I had like 40 new companies on my watch list that just kept appearing, kept having tiny little factories making absolutely nothing, and people were putting billion-dollar valuations on these companies. Then some analysts started to sit down and said, okay, what's actually happening here? It turned out that they were making like twice or triple the amount of actual weed that all of Canada could smoke if they even tried to convert to smoking this. And really what ended up happening, and the reason why people started to realize, is that here in Canada, if that's what you're into, people just grow their own. Maybe in the long term, these are going to be amazing dividend aristocrats for the stock market. But whenever you're talking about the short term in that mania where Tilray was hitting like close to $200, after the hype is over and the actual thing does legalize and people start looking, nothing but crashes come. And I've seen so many companies, those small IPOs, very similar to what's SPACing now. I mean, the way to get onto the market is a little bit different, but the actual idea is you need to be making money in the stock market or hopes and dreams start to fade away and reality kicks in. There's a lot of short-term pump and dumps in the stock market right now that are going to hurt a lot of retail investors. Institutions will be fine. I mean, the bulk of them are not getting involved. And yeah, sure, Kathy Wood is getting involved, but that's why all these retail investors are looking at her like she's a god. But really, she's one in a massive field of big financial institutions that are not touching it. And it's not that they're not seeing it. I mean, Kathy Wood's smart, but a lot of these people are smart. They're not seeing it because it's a massive bubble. Kathy Wood is capitalizing on this massive movement, and she's capitalizing on a really good momentum for her company. And well, yeah, a lot of her funds have massive unrealized gains for her investors. Her paycheck is coming home with her. She's actually capitalizing on the real money. And I'm not saying that she won't have a bright future in investing in the long term, but there is a massive momentum here, and she's capitalizing on every drop. There's a famous saying in investing, and I'll just end the video with this. I mean, it seems like I'm making a quote every video now, but I like them. Bulls make money, bears make money, pigs get slaughtered. There's a reason why a lot of the big financial institutions are staying away from this movement. It's not because they don't see it, I promise you that. I hope you guys enjoyed the video. If you did, give it a like and subscribe down below if you want to see more content like this. I got a couple more videos to make on this space, and then I'm not going to touch it. Maybe I'll follow it if it starts coming down and, even if it starts going up. It's not like I'm going to take a big L or something and stop making them. Anyway, thanks so much. Hope you guys are doing well. Enjoy the long weekend, and see you guys on the next one. Bye for now.